This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, it's Mathis Connor with Connor Management Group, and this week we're going to look at the best overvalued stock to sell right now. Today is Wednesday, March 11th. I'm a day behind my usual schedule, sorry about that. But coming up, what we have here in the opening slide is a company that is in the credit services industry, and we see its 6-month downside potential at negative 58.4%. Yeah, that's a pretty hefty number for downside potential, but we'll get into it and you'll see what the story is behind this company. And on to the next slide, we see that the name of this company is called Cash America International. Their ticker symbol is CSH. The industry that they are in is in credit services, and once again we see the 6-month downside potential at negative 58.4%. On to the quick facts slide. Here's the business summary description for Cash America. Cash America International provides specialty financial services to individuals through retail services locations. The company offers pawn loans, consumer loans, check cashing, and other ancillary products and services such as money orders, wire transfers, prepaid debit cards, text filing services, and auto insurance, as well as involved in the purchase and sale of merchandise, primarily through third-party vendors. As of September 30th, 2014, it operated 863 lending locations in 21 states in the United States, primarily under the names Cash America Pawn, Super Pawn, Cash America Payday Advance, and Cashland, and 85 check cashing centers in 12 states in the United States under the Mr. Payroll name. So maybe Cash America International isn't a common name, but maybe you've seen some of these shops, or you haven't, these pawn shops or lending shops, payday loan shops. Their business operates in that space. The website is www.cashamerica.com. The company is headquartered in Fort Worth, Texas. They were founded in 1984, and they have 26,000 employees. Onto the products and services slide. We have 2 pages for change, just because of all the interesting information. What we have here in the first products and services slide is the Cash America logo, the Cash America Super Pawn logo, and the Cashland logo. We also have an excerpt from a recent investor report saying they operated at 859 lending locations as of 12/31/2014 in 21 states in the U.S., and they are the largest pawn lender in the United States in terms of loans to customers. Also on this first slide, we have a map showing where most of the operations are. It says top 10 states based on number of locations, and what we see here that of those 859 locations, 262 of them were in Texas, 120 of them were in Ohio, 77 were in Florida, 47 in Georgia. Tennessee had 41, and there are a few more, but you get the picture of their leading locations. Also on the slide is photos of some of their storefronts, Payday Advance, Cash America Pawn, Cash America Super Pawn, as well as the interior of the store showing, guitars and a lot of jewelry that they sell, as well as another location showing lots of DVDs. On to the second products and services slide. And I'm including a little bit more in the products and services slide just because this is such a bearish call. I mean, negative 58%. It's like, okay, well, what's the story? Well, let's see. What else we have here in the products and services slide is that we have an excerpt of what the inventory is for set. We have an excerpt of what the inventory held for sale composition. So basically, pawn shops, they lend out money and buy goods to hold the inventory. So half of those goods happen to be jewelry. Another 24% happens to be electronics. And another 14% is other, and 4% is listed as musical instruments. So that's as of December 31st, 2014. That's what the inventory holds. Another interesting thing on here is a graph, a yearly graph that shows the gross profit contribution by source. And the most interesting thing is that since 2011, the sales to commercial parties have been declining, and that is shown with the overlap of those sales are probably very highly related to gold, because it's perfectly correlated. When the price of gold started coming down in 2011, the third-party commercial sales started declining hard and declining very, very severely. So as you think, they pawn, customers pawn a lot of jewelry-related goods. They don't come back for them, or they sell them. Cash America then would in turn sell them. But if the price of gold is going down, then of course they would receive less revenue from those sales. Additionally, on this slide, we see that Cash America has been going through some strategic changes. One slide, it says, reduction in money service business products. So the company, in 2014, the company eliminated the following product offerings at its pawn units: money transfers, prepaid debit cards, check cashing, and money orders. Let's see, and they eliminated the auto equity product. Not sure what that is, in all states: Texas, Ohio, Georgia, Arizona, and California. So, a lot of these pawn shop cash lending operations have been undergoing a lot of regulatory scrutiny. So we imagine that that's part of the reason why they've exited that business. We highly doubt it's because of profitability. Additional slide that we took an excerpt from and put on here is exit migration from cash advance product. So it says the cash advance product eliminated from 311 locations during 2014. Product remains at approximately 1/3 of locations concentrated in Ohio, and is expected to remain 7 to 8% of total revenue. They closed all Texas monoline units in 2013, eliminated cash advance product from all but 40 Texas pawn stores in the fourth quarter of 2014, and they're currently piloting an installment loan replacement product in 11 Ohio Cashland stores. Additionally, this is their Outlook 2015 slide that was in their latest investor presentation report. So it says, play to strengths of business, strong cash flow, enhanced marginal profitability through asset expansion versus unit growth, and reinvest cash to build long-term shareholder value. New share repurchase authorization of 4 million shares, and increase annual dividend from 14 cents per share to 20 cents per share, a 43% increase. And I have to tell you, that last one sounds pretty, attractive. They're going to increase their dividend, but when you take a look at the balance sheet, it's highly questionable whether they'll even have the cash to be able to do that. So that's their slide. End of the day, I'm not sure I just don't buy this outlook. Okay, that was the page 2 of the products and services slide. Back to the metrics slide. The annual revenue of the last 12 months for Cash America was $1.1 billion. Their net income was negative $10 million, and their cash from operations was shown as not available on Yahoo Finance. And part of that is probably also related to the restructuring, because also in 2014 the company spun off their lending business, their online lending business called Innova. And usually when you have divestitures, it gets pretty hard to compare apples to apples and know exactly what's going on a cash from operations basis. The operating margins for Cash America in 2014 were 16.5%, and they're expected to be 17% in 2015. On to valuation metrics. Right now, the trailing PE ratio for Cash America stands at 7.1, and the forward PE ratio is at 18.4. So that is a significant increase, more than double the PE ratio from 7.1 to 18.4. And what that means is that analysts on average expect earnings to decline substantially. And the analyst earnings, projected earnings, are consistent with what Cash America management expects as well. So that's a big increase in PE ratio, which implies a big decrease in earnings over the next year. The PEG ratio is at 1.5, so it's not too high, but based on outlook, I wouldn't call this a value play, that's for sure. The price to sales ratio is at 0.6, which is somewhat low, and the price to book ratio is at 0.6, which is also somewhat low. The enterprise value to EBITDA ratio is at 6.0. So while most of these valuation metrics are not, say, expensive, that difference in trailing PE ratio to forward PE ratio is huge, and it implies that earnings are expected to come down quite a bit. As I've already described to you, Cash America has spun off their businesses and have gotten out of some definitely, I'm sure, lucrative businesses as of late. So, I don't see how their business is going to turn around anytime soon. And while we looked at the PE ratios, which we just reported to you, we also looked at some cash flow metrics, which also implies that this company will have a pretty high valuation metric over the next year and will be under some pressure to decline in price. The dividend yield for Cash America was 0.9%, or is. The average dividend payout ratio historically has averaged out to be 4%, and while they expect and state to increase their dividends, I just don't see how their balance sheet is strong enough to do so. And time will tell. On to the next slide. We've got the price chart for Cash America. And, I've been investing, following public stocks for a while, and I've seen something new. What you have here on this price chart is you have two very different price charts. And the prices are pretty identical for the last 2.5 months. So we got a price chart from Yahoo Finance. Stock price is what the stock price is, right? That's what you think. And we also have a price chart from the website finviz.com, a pretty mainstream website. And it turns out, I guess, if you do a restatement or a spinoff of a business, you get to somehow restate your stock price. I'm not sure what's going on here, but what I'm getting at is that Value Line as well as finviz.com shows that the high stock price was around $50 going back in November. It was as high as $50. However, on the Yahoo Finance price chart, if you go back to November, the high price is around $24, $25. And that's significantly different. I'm scratching my head, something I haven't seen before, and all I can assume is it's related to the spinoff of its business. I don't know what the history is behind restating price charts. You see them restated, understandably, when you have stock splits, but I haven't seen them restated this matter. This is my first experience with this. So the price chart, I think, is very misleading on the Yahoo Finance, because if you went back 3-4 months ago, the stock price was up around $50, $45, and today it's around $23. So that's what we have on the price chart, and I think it's just another indication of this somewhat of a complicated, misleading story going on here with Cash America. On to the next slide. We call it the why now, the bare rationale behind our position for Cash America International. And what we have here, the main reasons for our bearish stance on Cash America is decreases in revenues per share. We see them, and other analysts see them as pulling back over 2015. Similarly, cash flow per share is expected to decrease even stronger on a percentage basis over the next year. Additionally, the other reason is just we see a very high valuation metric in the near future for Cash America, which implies that there will be downward pressure on the stock price over the next year. So that's our bare rationale for Cash America International. On to the summary slide. The financial statement quality we stated is fair. For 2014, their net profit was around $100 million, expected to be around $40 million in 2015. And the debt they have due over the next 5 years is $265 million. So $40 million a year in profit, knocking away at $265 million due over the next 5 years. It's not a lot of room for error, and definitely not a lot of room to pay dividends, that's for sure. And additionally, the total debt, however, stands at $700 million. So if the net profit is going to be around that $40-50 million level, and they have a total debt of $700 million, that implies nothing but hard times in my book for Cash America in the near future. I guess the only thing that could happen conceivably to help them out, in my opinion, is that they get acquired. But I don't know if anyone would want to touch this company, but that remains to be seen. So the financial statement quality, we take a position that it is fair. The operating margin trend is flat. The price pattern trend, we say it's decreasing. How hard of a decrease it is depends on the story you want to believe behind, whether you want to follow the Yahoo price chart versus the FinViz price chart. Our general market outlook is somewhat bearish right now. We don't see as many upside bargains in general, so we think the market overall has just been fairly priced right now. And the recent closing price for Cash America International was $23.91, and our 6-month price target for the company is $9.85. So we see a 6-month downside potential of Cash America International of negative 58.8%. So it's for all these reasons that we believe that Cash America International is the best overvalued stock to sell right now. We hope you found this presentation helpful, and I'll talk to you soon. Take care. Bye. Hi, this is Matt Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental and technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trade's, a minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers two newsletters, both weekly, two weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.